Alright, welcome back. So in this video we're going to be talking about spreads, what they are, and the bulls and the bears. So it's very simple explanations about this, but just in case you're not aware about what they actually are. A spread is the broker's commission. Now if you go into the new order window, you'll see two lines here. The bid is the buying price and the ask is the selling price. Okay, so you'll notice there's a difference in the numbers here. 9378, 9380. So there's a 2 pips difference here. Now that is a spread. Spread between these two lines is a broker's commission. If you're looking to sell, you're getting this price. If you're looking to buy, you're getting this price, and relative price is somewhere in between, and the broker gets his share every trade that you conduct over the market. Okay, so guidelines of what to look for in spreads. A 2 pip spread is actually pretty good, you know. 3 to 4 is a little bit more common on the major spreads. If you start getting up to 5-6 pips, you start running into very expensive territory. So just keep your eye on the spread price before you hit a trade. You don't know what's going on all the time. I recall one time trading, and it was on a different broker, I won't name them, and it was during the non-farm payrolls, and I was trading live on a webcast during the non-farm payroll, and the pip spread went up to 60, so 60 points of a difference. So if we had actually placed a trade at that moment, you would instantly end up minus 60 pips. Okay, and then try and catching up with that. It's just obscene. Very, very rare that happens. Most brokers are regulated in what they can actually squeeze out of us, and if you get a reputable broker like I use, you get tight spreads all the time. So that's one thing you want to look for. Okay, so that's it about the spreads. You'll see they always fluctuate. But yeah, there you go. So that's a spread. It's a broker's commission. That's the cost that you lay down to conduct a trade. Okay, it's a cost of your business, and just make sure that it's kept tight all the time. Okay, so we want to talk about what the bulls and the bears are. What are the bulls and the bears? Well, it's related to an American football teams. The Bulls being the home team, the Bears being the away. So what's the objectives? Well, if the Bulls are playing at home, we're looking long, you know. If I were to start off here, this chart right now is bullish, bullish, bullish. Everything is up, everything is up. Once it starts coming down, then you're bearish. So that's a bearish chart down here. Okay, so bearish is down, which is short, and bullish is long, which is buying. Alright, now the bulls are always trying to hit a home run. The bears are always trying to strike it down. It's just a matter of who's in control. Now, what actually changes these the rules and where it goes? It's a little bit to do with everything, all collectively put together. It's the black box systems that people use. It's the stochastics that people use, giving people signals. It's prices on relevant levels. If you come to like a 1000 level here, these these are big changers. Daily stochastics, Fibonacci's, people's feelings on how countries are actually working out, news events, non-farm payrolls, countries' GDP figures, all these contributing factors all tie into the market and make it just chop about, and the highest volume of people in that relevant direction decides whether the chart is bullish or bearish. Okay, so there's no real simple factor of which direction it should be going. It's down to you and me collectively, and obviously the guys in the institutions, their decisions on where the market goes. It's all about the volume of money in the place. If there's more shorts on the market, more sellers, then we're going bearish. And if the money's in the market, everybody's feeling enthusiastic about where the price is going. Same as stocks, they just go up and up. Okay, so it's down to people's perception of where the value of that currency should be going. So that's a basic summary of bulls and bears. Bulls is long, it's a rally. Just need to become familiar with all these terms. And yeah, it's just a very brief explanation about it. So we'll get into more technical stuff in the next videos. Okay.